Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Welcome to The Bigger Picture. Now, U.S. stocks rebounded last Friday as investors hunted for bargains at the end of a tumultuous week in which U.S. President Donald Trump's escalating trade war fueled recession fears and tempered risk appetite. Now, we're seeing a broad rally that boosted all three major U.S. stock indexes to solid gains, with recently battered tech-related mega caps enjoying a comeback. And it has all been brought on by the whipsawing policies and pronouncements of the Trump administration. And the one thing that proves to be stable here would be uncertainty. Right now, there is a profound sense of uncertainty in the stock market, and to help us understand more about the latest meltdown and what it means for markets for the week ahead, we're pleased to welcome on the show Phan Vee Leung, the CIO at Trackrecord. Good morning, Vee Leung. How are you doing today?
Good. Let's talk about markets.
All right, let's talk about markets. Lots to break down today. Thanks for joining us. Now, for many of Mr. Trump's supporters in Washington and across America, the president is apparently doing exactly what everyone is expecting him to do as a savvy negotiator. That's keeping trading partners like China and Mexico off balance in order to gain the upper hand. But on that note, investors like us are facing dizzying shifts, which has made the stock market in the early months of the Trump administration as what some might call it untradeable. So what's your take on the new Trump administration's approach, and how is it affecting markets today?
I'm not sure if he's done exactly what he's expected to do, but he's pretty much delivered on his promise to keep things changing all the time.
Yeah.
I would say that although there's going to be haters and lovers of Trump policies, right? But as market participant, we are not here to discuss politics or have our personal feelings involved. So what we want to do is to objectively see what's the impact on markets of his policies and his announcements. Of course, his policies are hard to navigate around because he's announcing, I think it's unprecedented. It is unprecedented that the president announces trade tariffs in the morning and then rescinds it in the afternoon. That's like the record pace of taking away, imposing and rescinding trade tariffs. What it has done is that, of course, it has increased the uncertainty and increased the volatility. I guess that's what you mean by when you say untradeable. But it's not untradeable. We have seen conditions like this in times of crisis as well, but this is not crisis. It's just a higher level of volatility because of policy uncertainty. I think over the longer term, the trend that we have been seeing remains intact for now, but the volatility is higher. As such, the only mitigation factor that the investors can take into account and try to protect their portfolios is that you have to account for the higher volatility. That means you have to reduce your trade sizes, reduce the risk that you're taking, such that you don't get pressured to stop out or reduce your portfolio at the worst, most inopportune times, because you could have it go down 5% in 2 days and then go up 5% in the next day, right? So that's what we are seeing last few weeks, I guess, since the start of the Trump administration. And there's no end in sight for now. It's not going to stabilize anytime soon. But I guess that's the key takeaway. Reduce your risk positions, reduce the risk that you're taking, but be focused on what's happening in the longer term.
Okay, I guess the saying that goes stays the same, right? The only constant is change. So, deflecting concerns about the risks of a U.S. slowdown, President Donald Trump has also said that the U.S. economy faces a period of transition, and his early focus on tariffs and federal job cuts, that's causing market turmoil as well and widespread panic across different global markets. And just recently, U.S. Treasury Secretary Scott Bessent has also said that there are no guarantees when it comes to a potential recession hitting the United States. So how high are the risks of a recession?
I think what has increased is the fear of a recession, right? Rather than actual, we are not seeing this filtering into actual data yet. There's been some slowdown in some measures, but I think overall it's not yet clear that we are headed towards a recession. What has happened in the last few weeks is that there's a lot more talk about recession, and what surprised the market is that the politicians themselves, Trump, Scott Bessent, the Treasury Secretary himself, they are floating that word around, right? I think that's what surprised the market. Okay, but what's really important too is that let's not forget that the key measure of the performance of the economy and all is inflation, and inflation has surprised to the downside in the last few observations.
Yeah.
So that's a good thing. The uncertainty you're talking about, of course, yes, it's a higher volatility of markets, the volatility around policy announcements, and also job cuts. Okay, so we have seen by some measures, it's been measured around 100,000 job cuts of federal workers and all. The overall federal workforce is about 2 million plus, and even if they reduce 10% of it, it's about 200,000 plus, and that easily makes up for it in like 1.5 months kind of job growth, given the pace of current non-farm payrolls growth, right? Jobs being created. So it's not such a big concern over the longer run. But of course, it's sticker shock, right? People are seeing it being filtered down in the first few months of administration. They say, oh, this is, I mean, he of course, he wants to reduce the workforce, but there are rules around reducing the workforce in federal employees, right? And we're seeing pushback from the courts on this as well. Yes, they can reduce, but they must do it in an orderly fashion. It's not like Elon Musk with Twitter, right? You can just shut it down in like 2 days, right?
Exactly.
So yes, but of course, it creates a lot of fear, it creates a lot of panic, and we are seeing that coming through in prices of asset prices, right? We saw, of course, you said, as I pointed out in many news service this morning, markets rallied on Friday, but it was the U.S. markets, right? But it was the fourth week in a row that U.S. stocks are down. Yeah, right? And then that's quite concerning because we have been up. We've been seeing markets has been going up only for some time, right? Yeah. But although it's 4 weeks of down, S&P is not even down 10% from the highs, about 8% from the all-time highs. Okay. Nasdaq, which is higher volatility, is just slightly more than 10% from all-time highs. Yep. As Scott Bessent himself says, they are not so concerned about markets. A correction is a great response for markets to consolidate in an uptrend, and that's the case, right? It's just that investors are not used to it, but it's part of the whole process. Yep. So the longer term, I think we should be focused on inflation, focus on economic performance, and trade tariffs. No one knows where it's going. Yep. But you pointed out yourself, he's a great negotiator. He's getting all the other countries to give in to him because he's unpredictable. Yeah. So I think there's no increased risk of recession in my view, although the fear has increased because of the high volatility and because of high uncertainty. Yeah, certainly. And of course, it's a healthy pullback that we're seeing as well. So that being said, Phan Vee Leung, what does this suggest about how markets would be set up for the week ahead? I mean, we're also seeing just this morning, China saying that it will take steps to revive consumption in the world's second largest economy as well. Can you perhaps give us your 2 cents on it? Yeah, of course. I think you're absolutely right to point out about China. I think what's really interesting to me is that after many months of very disappointing performance from the Chinese asset markets, it's starting to do really well. And the resolve we are seeing from the Chinese government in terms of announcing policies and measures to boost the economy as well as the asset markets, getting to be quite consistent, right? It's not as it was in the year. Last year, it was sudden spurts of resolve and then faded away. But now, I think they are very much on the same page. They are trying to do what is necessary to boost the economy as well as markets. So I think that's something that investors should be very focused on. As to this week, what's important for the week ahead, we are having the U.S. Federal Reserve policy meeting this Wednesday in the U.S. time zone. Okay. I'm not expected to do anything on interest rates, but it'll be interesting to see their quarterly summary of economic projections. The last one we saw was in the December meeting. Yep. They revised growth down. They revised inflation their inflation expectations for this year up by about 0.4% because they were thinking U.S. trade policies. Because under Trump, they expect trade tariffs and all these things, policy uncertainty. They expected to have inflationary pressures. of course, we have seen a lot of tariffs being floated around, fears and all, but what has been present in the data is that inflation has surprised the downside.
All right.
This is just the beginning of the month,
Yeah.
but I guess we're running out of time, but it's important to see the economic projections. If they start to revise their inflation expectations down, we will likely see an improvement in risk sentiment.
That's certainly one to watch as well. Now, before I let you go, Phan Vee Leung, can I just ask you for your quick take on gold's recent surge to over $3,000 per ounce, and that's the first time it hit in history. So how are you reading the recent surge in prices, and does this raise concerns about potential overvaluation of gold prices today?
I think over the longer run, gold will continue to go up because of a few things. One is that the erosion of the value of fiat money, right? We're seeing inflation in almost everything, that in like travel prices, egg prices. Now we are seeing crisis in egg prices in various countries around the world. But gold is a consistent thing to measure your purchasing power against. So this is one of the reasons why it's going up. Inflation has been filtering through. But also the high uncertainty around trade war as well as geopolitical worries and all. So I think there's no sense of it being overvalued. Of course, at $3,000, it's never been seen. Many people think, but they think that it's overvalued. But we get the same discussion every the time when it broke 2,000 as well. So we are at 3,000. Where can it go? I think it continues to be a buy on dips until fundamentals of the market change.
Well, that's what we love to hear. It's going up and up. Thanks a lot for joining us this morning, Phan Vee Leung.
All right.
We've been speaking to Phan Vee Leung, the CIO at Trackrecord, talking all about the latest US market meltdown, what it means for the market ahead, and of course, what you can expect with gold prices in the coming months. Keep it right here with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.